Welcome to The Exchange. I'm Rob Cox of Breaking Views. Today in the studio, I have Dan Gross, who is the economics editor and a columnist at Yahoo Finance, and Jim Ledbetter, who is the op-ed editor at Reuters.com. Okay, gentlemen, so as we speak, the markets are absolutely tanking. What is wrong in the world today? I mean, Dan, what's wrong? What are we worried about? I mean, because it doesn't seem like anything happened.
I think until a couple of weeks ago, people thought austerity was really good. It gets people to get their house in order, and they're going to pay the bondholders, and everything will be hunky-dory. Now they realize when you do austerity type of things, that reduces demand for people who are selling goods and services. And when you have the U.S. and the European bloc, two largest kind of economic powers in the world, doing it at the same time, not good for
So it's sort of
companies.
like creeping
But
recognition of what's happened.
This is the most bizarre thing. We've had sort of 8 of the 9 last market sessions have been down. Treasury yields are 2.5% on a 10-year. It's starting to feel like
lowest corporate bond yields in like
fall
history.
of 2008. But there's no Lehman.
Right.
There's no triggering event. So I don't. Is it the fact that the House and Senate agreed on a budget deal that makes people upset because it does actually hurt the economy, or are they reacting to the fact that the deal itself is sort of a sham, and therefore the debt that we've been told
was a
is
sham
this
on
massive
Monday.
price?
Right, but also, you know, the
And
debt
here we are
ceiling,
Thursday.
The market was down on Monday, too?
The news has coincided with a bunch of other news that has kind of gotten buried in all that brinksmanship, which was GDP report, which was bad, and also they revised the last 3 years.
Right.
And we
So it was
discovered
actually worse than
Recession
we
was
thought.
worse, and the growth
08 or
is
09
less than we
really
expected.
sucked.
Really bad.
Really bad. So, but other data points, you know, retail sales, some corporate earnings, showing that the U.S. Which
So,
was
so you're
powering
saying
ahead.
these are some of the things that are good. Some of the things that we don't have to worry that are
No,
sort of
what
bright
I'm saying
spots.
is that the concern about the debt ceiling, whatever we think about austerity and that impact coinciding with this run of bad data. If we had been getting a run of good data, I don't think we would be in this situation.
Of course, we're just talking about the U.S. in this instance, and we look. You know, we've seen this tussle between the European Central Bank and the finance minister of Italy are basically they had dueling press conferences today. So we have, in a sense, we've all come to realize we have this great big problem. Austerity is trying to fix one thing, which is basically we have too much debt in the economies around the world. And we can deal with it in one way. We can try to cut the costs and try to cut the debt that way. The other option is, of course, to grow.
Right.
But it is extraordinary that what we have are political squabbles, which are revealing real paralysis around the world, or at least in the developed world. And yet nobody's even talking about it.
I think that is a factor. I think if you are faced with the prospect of holding a lot of bad Italian debt, for example, and you sort of look up from your gloomy, screen one day and you see Silvio Berlusconi give this really uninspiring speech, and you realize this is the leadership that has to cut these deals. That could worry you.
Were people not aware that Berlusconi has been the prime minister?
It somehow. No, you're absolutely right, but it didn't matter, right? Like he could have his bunga, and it didn't matter. But suddenly, when the chips are on the line, is that really the guy you want at the table?
And it's not just that. All of a sudden we have today one of the things, the data points, as it were, is that the finance minister, the gentleman. Giulio Tremonti, who's generally viewed as the adult in the room when Berlusconi's around. And I don't mean that because everyone else is not adult age. But he is now not just feuding with the Prime Minister, Berlusconi, which scared people a few weeks ago. He's feuding with Trichet, the central bank, European Central Bank. So, what we have is major discord without focusing necessarily on
This is also the way kind of, crises sort of sneak up, because you go back to 08, people say, well, of course, everyone knew, Lehman was levered 25 to 1. But, how absurd was it that we had these investment banks that were levered 30 to 1? What did you think was going to happen? But until the moment that it went down, the market seemed perfectly comfortable extending them the type of credit they were getting. So you
actually,
say there is no lemon, but maybe we have a lemano in Italy.
You could argue then that our sin was sort of over optimism, or allowing ourselves to be fooled by things like, as you've pointed out, burgeoning demand for commodities from China, the continued growth of the BRICS, et cetera. but that we were overly optimistic, and we're now seeing kind of a regression to the mean or a correction.
The other possibility, and if you've ever had a 2 or 3-year-old, you see a child kind of work themselves into a frenzy over a freak out about something.
I've seen 30-year-olds do that, but anyway. Yeah.
And I think now we're seeing markets do this, where it's anxiety creates the anxiety, right? Because we all see this headline, when the bond yields for a European country hit 6%, that means they're going to default. And so the bond yields are at 5.6, and people say, oh, well, gee, that's close enough.
Then it's 6.2, and then it's like freak out mode. But I mean, in a sense, we were thinking about 2008. You mentioned that sort of has that feeling of sort of before the fall of 2008. I mean, is it possible, though, that because the financial industry is not the problem at the moment. The financial industry's problem would be, their problem would be that they own all this debt, the sovereign. It's a sovereign problem. Can you have a run on the sovereigns? I mean, is that essentially what we're witnessing?
I think we've seen that over and over again. We saw it on Greece, we saw it on Portugal. We are now seeing it on Italy. When people say, well, Italy has to pay 7% for 10-year money, don't issue 10-year bonds. Issue 2 or 3-year bonds. That should be the reaction, because if the bonds are money good, if they're generating enough revenue and they're closing their sort of primary deficit.
Of course, if their funding is too short term, then there'll be a greater run on that. Then you have a problem with the whole structure.
But their problem is not Greece's, where they're not collecting enough revenues to.
No, they have a primary surplus.
They don't have that problem. So there is this large kind of psychological element.
Okay, before we go, what is there to be happy about?
Well, the United States didn't actually default on its debt,
so we avoided a default.
As it would not
got that going for us.
We continue to have low inflation, very healthy corporate earnings in this country.
Who would have thought we'd see today, a day when the whole market's crapping out? We have General Motors issuing second quarter results that are like way beyond anything they made.
Which should be an object lesson to all these countries, that defaulting is the best way to clean up your balance sheet.
Yes, strike it clean.
But other things that are going on, the general underlying trend, retail sales, Costco's numbers came out today, I think are growing positive, still okay. We're going to get a jobs number on Friday. That should be positive. Balance sheet repair, not so much. The public sector, to a degree, you're seeing states, their receipts are starting to rise. But when you look at things like delinquency rates, people doing a better job keeping up with their credit card debt, with their auto loans, with their student loans.
Personal bankruptcies are down.
Much better.
All right, there's some bright signs,
actually,
but it's going to take a long time. This is going to feel like
none
a long
of this matters
trip.
that much if you don't have a job.
Well, thank you guys so much for coming in. Dan Gross from Yahoo Finance and Jim Ledbetter. We'll be back with The Exchange soon.